What's going on, traders? Hopefully you had a good trading day. But in this video, I want to talk about these little areas that are basically small trading ranges, but these areas are called congestions, and they are called congestions for a reason, because market is really undecisive and the bars will just stack next to each other, and no trader will really know what the direction the market is most likely heading. And the reason why these congestions are so basically dangerous and a lot of traders will have losing trades, well, because it is very tempting to take both sides of these congestions, of these trading ranges, because these congestions are designed to lure people in, and it looks tempting to sell the highs because it looks like bulls are trapped, and at the same time it is tempting to buy the lows because it looks like the sellers are trapped. And this is your first sign, because normally when you are day trading, you're supposed to be more inclined to one direction. You're supposed to be only thinking the one direction, and the second direction of the market that could be happening, you just keep that in the back of your mind. But normally you should be thinking and focusing only on one direction. But in these little areas, it is tempting to take both trades. And the way you recognize these areas, basically the bars are stacked up next to each other side by side, but more importantly, the EMA is flat and it is in the middle of those bars. Every single congestion, you can see how the area is in the middle of those bars. And this happens very rarely. Normally the EMA, if you take a look at the chart, most of the time, 80% of the time you're above the EMA or you're below EMA, and just occasionally you will get EMA in the middle of those bars, but it will instantly go through and really will not waste too much time in the middle of those bars. But during these congestions, the EMA is going sideways flat, and it is exactly in the middle of those bars. The one thing that these congestions are helpful is they will test your patience. They will test how skillful trader you really are, because being patient is one of the most important traits of day trader. And these tiny little small little trading ranges, these consolidation areas, they will really test your patience, and you really have to see it on your hands. But the way you trade these congestions is there's only way to trade this safely. I mean, you can get few safe scalps in the middle, but that's really gambling. Those are not high probability setups. High probability setups do not occur inside of these congestions. The only way to trade this safely is to fade the breakout. And the market today started with an uptrend. So my first instinct was to find this trend line, and you guys can see how nicely it fits. It creates this geometrical line. It fits nicely. So this told me that the trend line is valid, and I just copied it and put it to the other side, and I noticed this overshoot. What I also did was I tried to find the previous key levels, because this is the part of your routine this is the part of your pre-market analysis. And what you will do, you will find the key levels on the chart where the prices are reacting, and just keeping in mind that prices may react in the future. And we have a double top right here. Prices are reacting to this resistance, and we have a second entry long below EMA right here. We are expecting a new high of this uptrend, and this is a two-legged pullback, so this would be a high probability setup. But we're below EMA and we have an overshoot, so this would be a fairly aggressive trade. What is much a safer trade is this higher low, because a lot of traders have been looking at this as a failed second entry long from their point of view. But this is the danger where you're trying to trade reversal trading way too early. We are now just bouncing off key level, that is true. But in order for us to safely trade reversals, we need to make sure that the previous trend has played out. And in this instance, the previous trade hasn't played out. And the people who went short too early as a failed second entry long, you can capitalize on this. They all started panicking once they saw this higher low, and it resulted in such a beautiful move up. So this is still part of the second entry long, just a little more safer trade. And a lot of people got trapped here because they tried to counter trend way too early. And we have no surprise, we have a big bearish rejection of the key level. So the market structure is shifting. Most breakouts will fail, and prices traded up lower and lower. We have a consecutive bearish bars, and this is almost 90-degree move, and 90-degree move will not go for a long time in the markets. Prices will pull back to the EMA. You can see how we are far away from EMA from this point on. We are so far away from EMA. Prices will go and will retest the EMA because EMA acts as a magnet. We have a second entry short right here, but we are far away from EMA still. We need to wait for prices to get to key entry point, especially after such a 90-degree move. And then prices unfortunately just went into this trading range. Lots of stims, lots of bars, lots of indecision. Basically, traders are really not sure what's going to happen next. But we found a support here at the previous key level. So we are bouncing off the low of trading range. And what's most likely going to happen? We're probably going to go to the other side. Just like it happened right here. We're going from bottom to highs, from highs to bottoms, from bottoms to highs. And the reason that happens, this doesn't happen that often, that we don't even get a breakout pullback. Normally these congestions, you will break and the breakout will fail and you at least get a breakout pullback pattern. But we would, as I told you guys, trading congestions is good. Fading the breakout. Fading is trading it in the opposite direction of the breakout, meaning the breakout is to the low side, and with us fading it, we are buying the breakout to the low side, just like here and here. For instance, if we broke higher here, we wouldn't have been selling the breakout higher because the overall market structure, the price action, keeps telling us that there's a lot of buyers in the market. We're coming from the lows and we're heading to the highs. So even though if we broke higher and we had a good bearish signal bar, we would not be interested in selling this market because it is we are looking to go long. We would, however, if we broke lower, we would be expecting to buy this breakout because we are coming from the lows and we are waiting for prices to go to the other side. And for whatever reason, prices rallied up higher. This instantly basically told us that this is going to be strong uptrend. We are so far away from EMA the whole time. Last time we touched EMA was here. This is now a strong uptrend, and we have a first entry long, a second entry long, and finally high probability setup at the key entry point. We have a break and a new low, so this downtrend played out. I unfortunately had a loss here because I entered at the very close and I didn't manage to get my scalp in, so I took a loser here. And I was forced to re-enter at this point on because now I still don't like canceling the order way too quickly. Even though you have a 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bars going side by side, and I knew this was a congestion, I still wanted to let the trade ride out. And with this failed break lower, this is the way you trade congestions. We are in an uptrend now. This was a good trade to take the congestion, and here you have a higher low, but once again, you just continue the congestion. It is really unsure what's going to happen next. When you're trading this live, you really don't know what's going to happen. You're just seeing this, like this, and really anything can happen because this should have worked. It worked for a scalp and instantly pulled back. So, this is just the first entry of both ends. And by this point on, I was expecting to find some bigger channel because this was an uptrend. And you always have to be thinking only to buy when the market is this strong. So I was thinking whether there is some bigger channel, something like this. But this wasn't really coming into play no matter how I tried to fit in. And what I just later on adjusted it a little bit. And what I think ended up being a little bit like this. The channel ended up being a little bit like this. And this is what you have to do when your prices are in an uptrend. You just have to find a bigger pattern. There has to be some bigger pattern while we are going higher like this. And prices continue to work higher. We have this downtrend working lower. We have a massive overshoot. We have a break. We don't have a new low yet. We don't even have a double bottom. We have a new low right here. And this is a perfect two-legged move down. First leg, pull back, second leg to this trend line. Market likes to move in twos, but once again, congestion. EMA is flat, bars are going sideways, and it is tempting to go both ways. I guarantee you, if you're watching this live, you want to go long and short at the both same time, at the exact same time, and that's basically your indicator that you are in a danger area and you're supposed to be once again testing your patience. And you have a failed break lower. and you have a nice bullish bar. And just like it worked here once, its repeat pattern is mostly going to work again, and prices are continuing in this uptrend. Still, you're focusing on longs only, and you have a first entry short, second entry short, but we're not looking to go short. Even though it's a second entry short, we are now in an uptrend, so we're only looking for setups with the trend. First entry short, second entry short, failure, bullish bar, EMA is holding prices, and the market is getting so strong you're not even gonna get to the trend line. And prices kept working up higher, and you just lately, I don't think there was any particular good setup. There's a trend line working lower that it is in your way, and you really cannot take no entry here. You have a higher low here, but you know, it is a doji bar and you're in the middle of the EMA. It is starting to look very choppy here, and unfortunately this was the end of price action we had today. But just remember, these congestions, they will test your patience, and every time you feel like it is tempting to take the trades in both directions, you're most likely the best thing for you to do is just to sit on your hands and, you know, do nothing. Wait for a higher probability setup at the key entry point. So I hope you find this video a little bit helpful, and I'll see you guys in the next one. Bye guys.